If you're thinking about buying or selling real estate in Panama City Beach in 2024, I really encourage you to watch this video. I'm Craig Duran with the Duran Group over at Berkshire Hathaway HomeServices. This video, I'm going to go through a quick 20-year analysis of the Gulfront condo market, the detached single-family market, and the Gulfront detached single-family market in Panama City Beach. And the reason I want to do it this way is we're in some territory that we haven't been in a very long time. I know a lot of you, if you've seen these videos, I'd like to talk about the previous month and maybe see where the market may be headed, or maybe look at the previous quarter, see where things are going. I want to look at a 20-year period very quickly because you've got to see really just how astounding some of these numbers are. So again, we're going to go through Gulfront condos, detached single family, Gulfront detached single family, and we're going to focus on months of inventory. Anybody that's watched these videos, you know I'm a big fan of this metric. It's a very simplistic way of looking at the real estate market. It's not the only number we pay attention to, but it's easy to communicate it, so we're going to use it today. Remember, 5 or 6 months of inventory has traditionally represented a very neutral or balanced market in real estate, which usually meant very normal or very balanced pricing. 5 or 6 months of inventory theoretically means that if we're looking at one neighborhood, that we would sell through everything that's for sale in that neighborhood in 5 or 6 months. Same thing if I'm looking at a condo project and I'm at 6 months of inventory, theoretically it will take us 6 months to sell out of all the condos that are for sale. You could do the same thing for a city, for a state, whatever. So the other thing to know is if you're less than 5 months, just like you would think, if things are happening faster, if it's 2 months of inventory, we're selling through things quicker. There are more buyers. There's less supply. You hear more stories about multiple offer situations, houses and condos selling very quickly. The longer we stay at those numbers, the more price appreciation you would expect to see. And the exact opposite is true, of course. If we're more than 6 months of inventory, say we're at 8, it's taking longer to sell. There are fewer buyers. There's more supply. And the longer that we stay in a buyer market situation, that's when you start to see pressure on pricing down, because if someone really wants to sell something and they're dealing with 10 months of inventory, they may not want to wait that long. And so it's very common to see price depreciation in those situations. So I want to show you some pretty interesting numbers, and I don't pretend to have a crystal ball any more than anybody else does, but I want to show you some things and let you decide for yourself where you think things may be headed based on what we're seeing. So let's start with the Gulfront condo market. In February, so this is December of 2022 to February of 2024. If we look back in March of last year, we were at 1.48 months of inventory. And through June, we were still no more than about 2. We've gone by February of this year, we're at 14.44. So more than 7 times slower. The market's over 7 times slower than it was this time last year. That's a big deal. Remember, 5 or 6 months is balanced. We're at 14 months. So very much buyer market territory. We've been trending into buyer market territory since about November. But to give you some perspective on this, let me go back 10 years for you. And this is the same Gulfront condo market. Here's our 5 or 6 months of inventory line. This is 5. This is where we are today. This is the beginning of COVID. If you remember how everybody was thinking, feeling, think about what you was going through your mind in March. Whatever you thought about the coronavirus pandemic coming in. Of course, it wasn't called a pandemic back then, but whatever you thought about this thing that was happening, at the very least in real estate, what was happening was people were waiting to do anything. For a lot of reasons, for some reasons, you couldn't do things. So in April and May of that year, we spiked in the Gulfront condo market to 8.81 and 5.63. We remind you, We're at 9.67, 10.26, and 14.4 in the last 3 months currently. And if you look at this further, remember 5 is our neutral line, 5 or 6. Going back to 2014, we haven't even been above, very little above 6 in 10 years. So we've been, for a couple of years here, we were at about a neutral market. Since then, we've been in a seller market since about 2017 in the condo market, except for this little blip right here, and except for this period right now. And what people may or may not have been paying attention to is that's why we've seen some nice consistent appreciation in the Gulf front condo market, and especially pretty dramatic appreciation in prices when we get down this low. Look at some of these numbers: 0.45 months of inventory, 0.73 months of inventory. That's less than a month. Theoretically, that's saying we're going to sell out of the entire Gulf front condo market in 0.45 months, half of a month. That's how hot things were. This is where things are today, 14.4 months of inventory. If we go back even further, this is ending where this last chart started. This is December 2014. Here's the beginning of the recession. The beginning of the recession, we get to 17.75. You have to go back to January of 2009, beginning of the recession, to get a number where we are today in the Gulf front condo market. One other thing I want to look at really quickly on this chart from a pricing standpoint. So I'm going to stress it one more time. Over a 10-year period, it's not even close where we've been the last 3 months. The spring market is going to have a lot to do with where pricing is going to be headed. And of course, that has to do with a lot of things. Remember, in this 10, 20-year period that we're looking at, I don't know that we've had a number of factors to affect the condo market like we do right now. Affecting the condo market right now, new laws in the state of Florida having to do with funding reserves, which is making it more expensive to own, or at least putting some assessments in place, which for the short term are going to make it more expensive to own. Higher insurance rates, which are driving HOA fees up. Rental revenues were a little off last year. The rental season is going to be very important this year. Higher interest rates, all those things is kind of this perfect storm of hitting the condo market at the same time. Years past, we've had a hurricane, we've had an oil spill, but we haven't had these number of new factors all happening at the same time. So where do you think the market may be headed? And where do you think in the spring market, we have about 60, 75 days after spring break that's really going to dictate a lot. So are we going to really come off of this line very quickly? It's possible. This is how quickly we recovered after the coronavirus. It's going to be really important to watch because it's going to be important to watch. You see potentially where pressure on pricing could be. I have some ideas for buyers and sellers at the end of this. But essentially, if you're selling in this market, this is back to what I've been talking about all since the beginning of the year. Your marketing is important, pricing is important, all these things, because it's going to be a slugfest competing with other sellers in the market. Buyers have essentially 14 months of inventory to choose from. They have all kinds of choices out there now. And if this line keeps ticking up, that's even more severe, more pressure. So we'll look at the other markets. Detached single family market right now, same time period, December 2022 through February 2024, similar. June of last year moved from 3.39 up to 10.33. Thankfully, 2 of the last 3 months, it's been a little closer to neutral. A lot of that is driven by new construction deals. 40% of the sales in the market in that time period is new construction. Builders are offering tremendous incentives right now to buyers. I just worked on a transaction that was a $430,000 sale where the builder was giving $25,000 plus in incentives between real estate agent bonuses, buyer incentives, buying down interest rates. $430,000 sales price, $25,000 plus in incentives the builder was giving away. So this is a little misleading to think that we're very, very neutral. If you're in a resale, thinking about selling sometime this year, again, pricing is very important. All the marketing that we're talking about is very important. This condos and houses, it's the same thing. Properties marketed with virtual tours sell for 3% more money. Properties marketed with video are seen 403% more often online. Those are the kinds of things you have to be pulling out all the stops right now. And this is just the beginning of the spring market. This is like heading into the storm. How big is the storm going to be? I guess we're going to find out. 10 years of activity in the detached market. This peak right here is COVID. So in some ways here, we're touching higher than even the beginning of COVID right here. This was Hurricane Michael. So for 1 month in Hurricane Michael, we actually hit 11.32. We're not quite there. We've gone to 10.3 a month ago, but we're dealing with numbers in time frames of how people were feeling and transacting in COVID, beginning, hurricane, that kind of thing. This one's pretty interesting if you really want to get into the data and look at our graph over here. These are the numbers leading up to the recession. 36 months of inventory, 49 months of inventory, 52 months of inventory, 45 months of inventory, literally off the charts type numbers, which is why it wasn't terribly surprising to see a housing crash like we saw. I think optimistically, we're not dealing with those numbers. We're dealing with 5, 10, 6. So detached single family market, a little bit better than the condo market for sure. Detached Gulf front market is interesting. Remember, we're looking at less data here, so the number is going to bounce around a little bit more, but very similar. June of last year, 1.8 months of inventory. We've moved up to 10 and 11 recently. One sale has helped us move down to 2 just for a split second in December, but January and February, we haven't even had one Gulf front sale yet. If you go back 10 years, Gulf front, the neutral number, 5 or 6 months of inventory, is probably a little higher with Gulf front since it's more expensive. So even we can see we've hovered between 6 and 10 a lot, depending on the time of year. We've gotten pretty hot, but this number bounces around quite a bit more. And then what's really interesting is going back 10 years before that, we had even fewer sales of Gulf front homes. It's hard to even pick up trends because there are just so few sales. Looking at something a little bit differently on this chart, this is what I wanted to talk about a minute ago. Let me show you a couple of things with pricing trends over this 10-year period. This is in the condo market. If we look at starting with the new average list price, I'm trying to get this off of here for you. Oh, sorry. So the new average list price, take a look at this in the condo market. It had been trending up for 10 years, right? And look how it gets a little flat and actually starts to come down. If we looked at the active average list price, it's even more telling. Look at this over a 10-year period. This is, it's been sort of a steady appreciation in pricing. Interest rates spiked middle of 2022. Everyone got real excited about the market late 2021, early 2022 because of how hot things were. Everyone figured out, we can really move our prices up. And look at what's happened since then. Prices have been trickling. Asking prices, the average active average list price has been coming down since July of 2022 consistently. The pending average list price, it's a similar story. We've seen 10 years of appreciation on this number, and it's starting to trend down in the other direction. And so I get back to this number of looking how now those average price, listing price depreciation numbers were starting to trend down over the last year and a half. And that was happening in this climate. Look at where we are today. And the same thing applies in housing. The same thing applies in Gulf front. A little less in Gulf front. Gulf front would generally stay a little bit more stable through all this. But a couple of notes for starting with Gulf front condo sellers. it's this next 60 to 75 days. If you're thinking about selling right now, your marketing has got to be right. Your price has to be right, and pricing probably has to get ultra competitive. Um, if you're not in, if you aren't in a need to or really want to position, make sure you're considering that we could be at the beginning of some price depreciation, which means that takes time to depreciate, takes time to find a bottom, takes time to start getting momentum the other way to get back to where we are. And that could be a 3, 4, 5, 6 year period to work through a cycle like that. So if this is a matter of moving money from one asset to something else, or selling and cashing out, or you don't use it as much anymore, or it's a need to thing, you really have to sell this thing, I would just really encourage you to consider this and what I just showed you, and where you think the market's heading when you're setting your price, when you're hiring someone to help you market it. Are they hiring it? Are they just taking photos with their phone? Or are they doing professional photos, 3D tours, professional videos, blogs, socials, all the things that you have to do when it's, almost war out there, so to speak. I don't mean to over exaggerate, but this isn't a once in a 15-year number we're seeing. Detached single family sellers, similar story, but from a little bit different, because you're competing with builders who are seeing the same chart. And builders don't want to sit on, just like a seller doesn't want to sit on a house, a builder doesn't want to sit on a house that's been finished, especially these bigger builders. They don't want the house to sit for 4 or 5 or 6 or 7 months. So that's why you see tens of thousands of dollars in incentives. They need to move this product off the shelf. Sellers of a house, you're competing with that. So make sure your marketing's phenomenal, your pricing's right, and you can even talk about incentives and strategies you can offer as an individual seller to compete with those builders. Gulf front, I could tell you probably can be a little bit more patient maybe than the condo buyer. We have a Gulf front house for sale right now that is getting 2 showings in the next 5 days, where we hadn't had a ton of showings in the last few months. So maybe the spring market's showing some signs of picking up, hopefully across the board. I still, though, Gulf front sellers, all those same things still apply. I can't stress it enough. Properties marketed with virtual tours tend to sell for 3% more money. Properties marketed with video receive 403% more inquiries. So I hope what people are taking out of this is realizing this is a once in a 10 or 15 year thing that we're seeing, especially in the condo market. The detached single family market is probably a little bit more reliant on interest rate moves, which is anybody's guess still at the moment. I can't stress enough how competitive it is to be trying to sell something in this market. So please consider that. If you follow me at all, in whether you're getting our newsletter every Friday or watching the market update videos for your neighborhood once a month, you'll see that we're going to track it over the next we do it every month anyway, so you'll start to see. It's going to be interesting to see where this spring market goes, especially in the Gulf front condo market. I hope if you're still watching this 18 minutes later that it gives you some perspective, because I think we see a lot of things on the internet, and we see a lot of video, and we see a lot of charts, and it sort of can gloss over it and become we can almost just scroll to the next reel, right? This is important to pay attention to. It's gonna cost a lot of people a lot of money, and it's going to make some people a lot of money with how it is to navigate this market that we're getting into. So I hope it helps. Again, I'm Craig Duran, the Duran Group over at Berkshire Hathaway Home Services. My direct line, if you want to call or text and chat about this, 850-290-0417. I'm happy to strategize with you, whether you're thinking about buying or selling. You don't have to be right at that point of getting ready to transact. I like kicking around and strategizing with people, because this is always individual also. So whatever your specific situation is, I hope this information can help you get to where you want to be. And we'll be back with some more information. It'll be a first quarter update at the beginning of April. So thanks for watching.